My name is Kevin Kalyan, and I run multiple businesses generating over 8 figures annually. How do I do this? Well, I'm the owner of Gold Star Premier Properties, the owner of Gold Star Floors. I am also a real estate developer that specializes in new construction and fix and flip properties. What I don't like to do is brag. I like to work. That's why they call me the Silent Mogul. On today's podcast, we have a very special guest, Ms. Christina Shaw from the Shaw Agency. Christina, thank you for being with us today.
Thanks for having me. I'm so excited.
I appreciate it. For those of you who don't know who you are, can you give us a short introduction?
Absolutely. So I'm Christina Shaw. I appreciate you having me here. I own an Allstate agency in Wantagh on Wantagh Avenue since 2007. I've been with the company for 24 years. I love what I do. I have 2 small kids, 2 small daughters, and I live in Lido Beach, and life is good.
When you say small, how small?
They're 6 and 8.
So I have a 4-year-old and a 2-year-old. So
You're still in that stage,
the
right?
elementary stage. 2 boys with a lot of energy, drive me nuts, but I love them.
So my boyfriend's son is 7, one of his sons. So he's right in the middle of the girls. So when they're all home, 6, 7, and 8, it's a complete whirlwind.
It's like a circus.
Yeah, totally.
So right off the bat, I just want to ask you, how did you get into the insurance agency?
Love that question. And I think I love it because I love what I do. I tell people on Sunday nights, I never think, my God, tomorrow is Monday and I have to go to work. I get excited that it's a new week. I was in college. I went to SUNY Albany.
Okay.
I thought I would be a social worker. I wanted to help people. I guess my dad had a different idea, and he told me I have to get this insurance license and I should sell insurance. So I got the insurance license because that's what I was told to do. And I started working part-time in an Allstate agency.
Okay.
When I graduated college, I took a full-time job in an Allstate agency, and then a few years later, I wanted to go on my own journey and own my own business.
So what do you think is the most difficult thing about being a business owner?
I think, especially a small business owner, it could be a lonely road.
Okay.
I have 9 people that work with me on my team, and we're very close as a team, but when you're leading and responsible for these lives, it can be challenging.
I feel like you have a lot on your shoulders.
There's a lot on my plate. I'm responsible for their livelihoods and their families, so I take that really seriously.
Okay.
But Allstate is this incredible company where even though I'm a small business owner and the guy or gal down the road is a small business owner, we come together as a community and we really help each other. So I think I'm fortunate in that aspect.
Okay. Well, I've been to your office. It's definitely a very intimate type of setting.
Oh, definitely. No secrets.
Your staff is very, very pleasant to work with.
you.
And I must say that you have certain systems in place where even though you may not be present, your name still carries weight. For example, if I put a listing on the MLS, within a day to 2 days, I get an automatic email. Would you like a quote on your homeowner's insurance? Which for me, it feels like it's coming from you, even though it's automated. It still has your name put out there, so it's beneficial to us as realtors or
Thank you for
brokers.
saying
So
that.
I do love that aspect of your business. And what I love even more than that, a lot of people don't know if a property is in a flood zone or not, and you're one of the very few insurance companies that automatically tell you whether your property is in a flood zone or not. For me, it helps educate the consumer and kind of eliminate any kind of hurdles at the very beginning, as opposed to going into a contract or going further down the road and then you find out that the property is in a flood zone. It automatically adds a level of additional payments to their premium, and then they may not qualify based off of the flood insurance. So
I love that that you said that, and you're one of those agents who are looking into that ahead of time, but not everybody does that. So that was the genesis of having the flood insurance information go up immediately, because you can put a property into contract and that buyer doesn't know, and now those ratios are thrown off and the deal doesn't qualify and your life becomes a nightmare.
And then I get blamed because
oh, you get blamed for everything.
the person closest to them is always the first person that they blame, so I appreciate you helping me with that.
Awesome, I love it. I have a really great marketing team. I have 3 full-time people that do everything that you just said on a daily basis. So I'm very grateful to have them on my team because it takes a lot of work. We put up over 4,000 quotes a month.
And I know your team is great. I've dealt with them actually on a first-hand basis, and you're also one of the most generous agents that I know because you kind of help facilitate things that make my life easier. And to talk upon that, like something as simple as hosting an open house, you would cater it, no questions asked. It would be delivered. It would come. You have I forgot her name.
Arthur's sister did the Dara did the. I always
cookies.
Use the your logo
on the cookies
in my presentations to Allstate agents. I love your logo.
And to be honest with you, I have a few clients that still post that on their Instagram, and I've gotten so much positive feedback from that. It's incredible.
Let's do it again. Sometimes it takes conversation like this to remind me. We'll do another one.
I loved it, and kids love it too because the cookies are edible. They taste great.
And it's COVID friendly, right? Not everybody's mushing their hands in.
You took the time to individually wrap each cookie, which probably took a lot of time, over 30 or 40 cookies to take the time to individually wrap them for an agent or for an agent's open house. That just shows the dedication that you put forth for the referral partners you work with.
I just want to make your life and the lives of my referral partners, I say, if I want to make your personal and professional life better because you work and you know me. So however I can do that, it's my pleasure.
Well, I love working together with you. We do a few things, we co-market together, and we're getting great feedback on it. So I just want to keep the momentum going for the remainder of the year and in the future.
I love it.
But one of the questions that I get asked all the time is, how is a person's deductible calculated? Like, how much should somebody put towards their deductible? Whether is it 500, 1,000? What?
It's such a great question because I think if we could back up for just a moment.
Sure.
A lot at the end of the mortgage transaction is when the mortgage processor or closing department will ask for the evidence of insurance and paid receipt. And so often it's thought of as, I just need this piece of paper to clear my file to close. But really the piece of paper in the time of a claim is going to be the difference if you are made whole again, or if you're going to have a financial nightmare on your hand. So when we review the homeowner's insurance with the buyer, the prospective buyer, it's so important for us to make sure they understand the coverage, because at the time of claim, we want absolutely no surprises. And the deductible is something we really talk about because typically we'll always start with $1,000 deductible. Okay. When I started 101 years ago, it was $500.
You look like you're 25.
I love you. It was $500. That was normal, if you will. But now $1,000 is pretty typical. Okay. So what that means for the listener that may not know is if you call me and you say, Christina, I came home from work, a pipe burst, there's water everywhere, and there's $25,000 worth of damage. You, as the homeowner, will be responsible for the first $1,000, and we, the insurance company, will pay the difference. Now, sometimes if you have a higher premium, maybe a more expensive home, I would recommend a $2,500 deductible or a $5,000 deductible, because the higher the deductible, the lower the cost of the insurance, because you're taking more risk. But again, I'm not going to recommend that to somebody who that would be uncomfortable for them to pay.
But if somebody's buying a house, say on average, a house is $500,000, you would think that $1,000 deductible would be something that they would just shut their eyes and do, but it's this misconception of, let me just go with the cheapest option, but the cheapest option may not be your best option.
Yeah, cheap is expensive. You may or may not know, I had a house fire now almost 5 years ago, and I lost my entire house. And I don't tell you that story so you feel bad for the girl with the big hair, but I say that because if I didn't have certain coverages, I literally would have been financially devastated. So at the time of claim, nobody is saying, oh, I'm so glad I saved $40. You know, it's not expensive to have the right coverage, and not every coverage is for everybody. And
I also feel like there is a level of misinformation or lack of knowledge being presented to the consumer. Like, if I was purchasing a house, I would want the person that's insuring that house to have a conversation with me to explain the different coverages and what means what, you know, because this is not something that I specialize in. This is something that you specialize in. So I feel like one of the benefits and one of the things I love about you is that your first-hand approach with the consumer is second to none.
Thank you.
And the fact that you take the time to speak to the consumer, explain all the fine print to them so that they can understand it in English terms.
Yes, I always give you real life examples, like the mailman slipping on the ice. I don't know about you, but that's never happened in my career. I like to give you examples that really happen so you as the consumer will say, okay, this makes sense, now I can make an educated decision.
Yeah, because the more information I know as a consumer, the better decisions I can make, not only now, but for the future. And simple things like slipping on the ice or tripping on a cracked pavement, little things like that can really hinder you financially if somebody's being malicious, or even if somebody legitimately has a claim against you.
I know you work a lot with first-time home buyers, so a lot of first-time home buyers, they'll call me, and let's say they're buying that $500,000 house, and then I start to explain the replacement cost of $375,000. They immediately say, well, I'm buying the house for $500,000, Christina. And I explain that that's the value, and in the value is the land, the school district, the community, and that I don't replace. I'm just replacing the structure of the home. So again, really educating. So if and when they shop it around, they actually know the questions to ask the State Farm agent or the Liberty Mutual agent.
Can we touch on that a little bit more?
Absolutely.
So those that are viewing this podcast right now, if I buy a house for $500,000, why should I get coverage for $300,000 opposed to $500,000?
Great question. So that purchase price takes into consideration the land, and the land is what's so expensive, and nobody's robbing the land. The land is not burning. So we are just insuring the structure.
Okay.
So I'm going to ask you questions like, what's the square footage of the home? Is it wood frame? Is it a brick home? When was the roof last replaced? All of these questions go into the replacement cost of just the structure. I'm not interested in the value. And look at the environment we're in right now with COVID and the real estate market. Values are inflated right now, right? And so that has nothing to do with the rebuild number on the home.
But is the rebuild number, is inflation calculated in terms
Love
of
that question.
lumber
Yes.
costs and things like that?
So there's an inflation guard on every policy. And what's awesome about what's happening now is over the years, people will call and say, Christina, my insurance went up $75. Why? And I say, well, because we have an inflation guard where we add coverage every few years. And sometimes that's a tough conversation for a consumer to swallow, but here's the perfect example. If we didn't have that inflation guard and somebody had a claim right now where lumber is 4 times the cost of what it was 2 years ago, we wouldn't be able to rebuild. So
I've had that call actually last week for a client that did a purchase with us. Pre-COVID, and the way I explained it was pre-COVID, plywood was $18 a sheet.
Yeah.
Post-COVID, plywood is almost $80 a sheet. Now it's reduced, slightly. It's reduced about 60%. So the cost has gone down. But what would have happened last month if your house had got on fire and you would have had to do that complete rebuild? You would be paying basically the premium of the plywood cost right now, which is $78. You would be building off that number.
Exactly. So that's why you need that inflation guard.
Yeah.
And that's why you have to understand your policy. You have to know some people need coverage for their jewelry, others do not. Most policies cap out at $1,000 of jewelry coverage.
Okay.
So that's why if you have to get your insurance the day before closing, so be it. But it's always best to really have that conversation with us early on in the process so we could educate and explain each coverage.
So my question, or a question that's posed to me often, is how is insurance quotes calculated? What goes into that calculation?
Okay, so this could make people upset, but it is what it is, right? So we look at your It's called an insurance score.
Okay.
It's not your FICO, so I am not pulling a FICO report. I don't know that you have a 715 and you were late on your Chrysler payment. I don't know any of that.
Okay.
But there is an insurance score, and that makes up your premium. So the lower your insurance score is, or let's say it's like 1 to 30, 1 being the best, 30 being the worst. So if you're a 1 or a 2 or a 3, you're going to pay a much lower rate than the person who doesn't have good credit. And that could be upsetting to some people, that
Absolutely.
credit comes into your insurance. But even on car insurance, we look at credit before we look at your driving record.
But I would say in rebuttal to that is that if you do fall into one of those higher premium categories, maybe you should look at the advantage of bundling your car with
Oh my
your
gosh,
home.
yes.
And that would provide you with an additional incentive to lower your costs. So there are options for everybody. You just have to be knowledgeable about what your options are to be able to make an informed decision.
Absolutely. And not all companies will look at an insurance score. So if I speak to the buyer early enough and we have a conversation and they say, hey, I have my credit is compromised. I have companies that I write with that do not look at credit. So I'll probably go to that company versus an Allstate because I'll get a more competitive rate for the buyer.
That's knowledgeable information.
So I always will, as much as, again, we want to make sure they have the right coverage, we also want to make sure it's competitive. I'm a consumer
Understood.
too. So my sister and she's an Allstate agent as well. So we'll always run things by each other.
And like we discussed earlier, the cheapest option is not always your best option. And I also do know that you do not only residential, but you do commercial also.
Absolutely.
As we've talked about that in the past. But just off of your knowledge, what would you say would be the top 3 things to help lower your costs, whether it's homeowners insurance or whether it's your car insurance? What are the top 3 things you can do to get that rate down?
It's very easy on your car insurance. Defensive driving will, off the bat, save you up to 10%.
Okay.
It's good for 3 years. You can take it online. I used to teach it for free in my office, but with COVID, I don't want that liability.
Do you think there will be a virtual option for that?
You could do it on the computer now.
Okay.
That's a great question. That's a great idea. I could have the instructor just teach it virtually. I don't know that he would want to do that, but
The Zoom.
yeah, I like that. I don't know why I never thought of that. So, but they could go on the computer. It's $24. It is a 6-hour class, but you have 30 days to complete the course. Mm-hmm. And again, you save 8 to 10% off your car insurance for 3 years. Also, if you drive under 15,000 miles a year, you definitely want to let your insurance company know because we have low mileage discounts. And then again, when you bundle, and I could really only speak for Allstate, but you get 38% off of your home and 10% off your car insurance.
That's almost 40%.
It's hundreds and hundreds of dollars. And then always looking at those deductibles, right? And making sure if you do have young drivers on the policy, we give good student discounts. So you want to make sure you have that relationship with your agent so that he or she is looking at your policy every 6 months or every year and making sure that you're maximizing all your discounts.
So for those folks out there that are driving under 15,000 miles, how do they?
How do we know?
Oh,
okay. So this is, it's awesome. It's called DriveWise.
Okay.
And it's a small blue device. We are moving over to an app-based device, but that's not until 2023. So it's like this big, the device. I mail it to you. You plug it into the diagnostic port in your car, and you immediately get 10% off your first 6 months.
Okay.
And then if you're under 15,000 miles, you'll probably see that discount go 12, 13%. But let's say you only drive 5,000 miles a year. You could get a 16 or 17% discount. The worst case scenario, you do 25,000 miles, it'll knock down to 3%. So there's no harm in having it.
Okay.
But it does look at mileage. But the mileage is 80 miles and under.
Okay.
Because on more rural roads, like the speed limit could be 75 miles an hour. And it looks at braking. Believe it or not, that's what gets people the most here on the island is the heavy braking. But it's almost unavoidable. But that's how we know what you're driving.
Well,
and it's not GPS.
Okay.
I tell people, like, I don't know that you're going to Starbucks at 5 o'clock. Yeah, and I'm not that interested.
Or any extracurricular
other
activities.
stuff. But people do get There's some people who feel that they don't want Big Brother, and that's okay. I'm not. It is what it is.
Yeah, to each his own.
Exactly.
So my question to you, which I ask everybody that's sitting across from me, how has COVID impacted your business, whether positive or negative?
I've really been so blessed in my business. I almost get choked up because I know that it's been difficult for so many people. But my business, I was relatively I wasn't really affected in the sense of, all my employees stayed with me.
Okay.
We went remote about a week before the shutdown happened. I am considered an essential business, so we were able to be opened, but I just felt more comfortable with everybody at home. I was very concerned, being my business comes from real estate agents, but instead of being in their offices, we just hopped on Zooms and I did my education that way.
Okay.
I had the same challenges as everybody else with young children and running a business and homeschool, but it was kind of business as usual. We just had to change how we did business.
You had to adapt.
Yeah, and we had to do it quickly because, again, I'm responsible for those 9 lives. So
I hear you.
Yeah.
Have you noticed any new trends within the last 12 months that would positive or negatively affect what you see going on?
Well, as far as my industry is concerned, we thought that we were going to get some rate relief from the insurance department,
okay,
where we can possibly reduce some rates for certain segments of drivers. But the opposite actually happened because so many people are on the road. In this, I don't want to say post-COVID, but now that we're out and about a bit more, frequency is way up as far as claims is concerned, so that rate relief isn't there. So we're just kind of keeping our eye on that to see what direction rates go in.
Okay, that's kind of interesting.
It's really kind of fascinating because we thought the opposite was going to happen, but again, now that the world is opening up a bit and more people are on the road, I left an hour to get here. Yeah. And I was still 4 minutes late.
It's okay. It's all right. Better late than never, right? So what does a standard insurance policy? What should a standard insurance policy consist of in terms of dwelling coverage, fire coverage? Like, what are the A, B, and C?
You want to make sure that you have an all-peril policy, meaning that you're covered for really anything that could happen, except on your homeowner policy. Flood insurance is never going to be covered. That's a separate policy. But you want to know if you have a fire,
okay,
if you have a pipe burst, a tree fall in your home, a liability claim. You want to make sure that you're covered for all of those losses.
Those are standard or those are add-ons?
Those should be all standard,
okay,
within a policy. You also want to make sure you have replacement cost on your contents and not actual cash value. So you don't want the insurance company depreciating your stuff in case there's a loss. So for that person who's looking at that cheap policy, they may opt out of a replacement cost. But imagine if you have a fire and now the insurance company tells you they're going to give you what you could sell your bedroom set on Craigslist for, or Facebook Marketplace. I'm dating myself with Craigslist. So what is that?
25.
Yeah,
25.
yes, exactly. So what is that, like $250 maybe? Whereas if you had replacement costs, you would get a brand new bedroom set of like kind and quality. So that's key.
That's interesting. So say for example, my house burns down, knock on wood, I hope that doesn't happen. Yeah. And the contents within my home are, let's just put 50,000. How does the insurance company know that that's the actual value of the content? Do I have to provide receipts?
That's a really great question, and I could answer it as an insurance agent and as somebody who went through that. And the contents in your house are way more than $50,000. I tell the story of the house fire happened on a Friday. So that Monday I went to Costco to buy, the ketchup, the mustard, all the spices, and it was over $2,500 just to put back the stuff in your cabinets, in your kitchen cabinets.
You see my stomach? That was $5,000 for my pantry.
So that's great. So you're going to give the adjuster a report of what was in the home.
Okay.
And these guys and gals are trained.
They have a price list.
To know, I don't want to say who's telling the truth, but if you're telling the adjuster you have 15 business suits from a designer and your income is such, like they know this style
Yeah.
home should have this many contents. But my advice would be go home this weekend and take a video of everything in your home and keep it on your phone, because what happened to me during my claim is you're emotionally devastated when something like that happens, and you're going to forget things inside of the home. And then a few months later, I'm like, oh my God, remember that suitcase I had in the attic that was a Louis Vuitton? And then I would have to like call the adjuster. And so if you have receipts, that's great, but you don't have to.
And that
have
video should at least have a timestamp so they know when that video was taken.
Exactly.
All right. Being that I'm also in the finance industry, a lot of times a borrower that's sitting across from me is going to ask me, what is the advantages of escrowing their insurance
Great
versus
question.
paying it out of pocket on a monthly basis? So can you give me the pros and cons of that?
So great question. I believe most banks are going to charge the borrower money if they don't set up an escrow account. I believe that's true. I know Beth Page, you have to pay your homeowner's insurance. There's no real benefit from my perspective if they have an escrow or they don't escrow. There is a pay in full discount versus if you pay monthly. So you'll save about 5 to 8% on your premium if you pay it in full. But if you choose not to escrow, I say whatever's most comfortable with your budget, whether you want to pay it in full or pay it monthly.
I just feel it's easier because
it's
something less that you have to worry about.
Absolutely. So, it's so much easier if you just make that one payment to the mortgage with your taxes and your insurance.
I mean, Christina, you've provided a lot of value to me and to the audience. I do know that you created this wonderful platform for all of your referral partners, so I would like you to spend a few minutes and just touch on that.
Awesome. So I'm a caffeine junkie, and I was sitting in Panera, and I am always thinking, how can I make sure folks like you know how grateful I am for your referrals? So I called Charles, our friend, and I said, hey, can you meet me at Panera, who doesn't drink caffeine?
For those that don't know who Charles is.
Yes. Charles Weinrab, handsome home buyer, Captain Permit. What does he say? If your house smells like cat piss, call him.
He'll buy it.
Yes, exactly. So I met him.
He definitely provides a lot of value to the community. I mean,
he's incredible.
I see a lot that he does, and he is a tremendous value, and the content that he provides is not only beneficial to the professionals, but also the consumers that are watching him, because he kind of touches both sides of it.
And he's just real.
Yeah.
He was my neighbor growing up. That's how I know him. So we've been friends since the 6th grade. So he met me at Panera, and I said, I have this great idea for a website. It's called Lotus Quotes, Lotus Quotes. And the real estate agent, the mortgage banker, or the real estate attorney goes to the site, and you put in the property address of a newly listed property, and we are going to tell you at completely no cost if there are any open permits or COs on the property. We're going to tell you what the true taxes are, and when they are grieved, what they will be. And then we're going to let you know if the property is in a flood zone, and if it is, what the cost of the flood insurance is.
And that's instantaneously?
That is, the flood is instantaneous. The taxes are next day, and the permit is usually about a 48 to 72 hour window, because Charles is actually going to town of Hempstead or town of
he's
Oyster
doing
Bay.
this himself?
Yes, I'm partners with him in this
wow.
site. So he has a team that will go down there. So you, as the real estate agent, you could take that off your plate.
That's incredible.
It's awesome.
I think that's a game changer, to be honest with you. I mean, it's like, for me, I'm having to do basically all three of those things and on my own, and for me to be able to have one platform which I can do that with, it's awesome.
It's so easy to use the website. And then, again, why wait till that title report comes back to find out that there's no permit for the deck and delay the deal?
I agree. But as we wrap up this podcast, first I want to just say thank you for being here with me, sharing this great value with the audience. And for those that want an insurance quote or just want to have a general conversation with you to maybe compare their current quote to what they may be able to have or save, how would they get in touch with you?
Awesome, and thanks for having me. I had fun. I was nervous. So they could call me at 516-900-1234.
Okay.
Or they could get in touch with me on Instagram. My handle is I'm with Shaw, SHAW.
And the office is in Wantagh, correct?
The office is in Wantagh on Wantagh Avenue.
Beautiful. So guys, again, thank you for joining us today on Success Without the BS podcast. I am grateful that Christina Shaw has taken the time out of her busy day to join us. Don't forget to like, comment, subscribe. Any question that you have, drop it in the comment section below, and we'll see you on the next podcast. Take care.
Bye.